So we're going straight into the charts today, no talking. One of the biggest questions I continuously get asked is how to identify momentum shifts. Now this video is going to be helping you to understand what momentum shifts are, and I'm going to show you a scaling in technique you can start using with your own trading. This is not simple. This requires you to take some time to practice it, give it a go, do your 100 trades, whatever else you need to do to become confident in this with this concept. So just very briefly, what is identifying momentum shifts? Now we have 3 examples here. I'm going to share 2 live examples of trades I called yesterday, and we'll break them down as well and show you how we could have entered them. But the first thing I want you to look at here is this is a consolidation off of the back of a downtrend. Now what we suspect when the market is trending to the downside is that price will make lower highs and lower lows. Now some of you might be watching this and saying, well, we all know this and you talk about this all the time. Well, if you know it, you know what to do. If you don't, just continuously remind yourself of this, because this is what's going to make you a great trader, when you respect the markets and you also respect when the markets are trending. So on the back of a downtrend, the market will create lower lows and lower highs. Now, if the market starts to fail to break structural lows, that is a sign to say that the momentum shift is depleting, meaning the bearish sentiment of the downtrend, which should form the lower low, is not happening or developing. Why? Well, there's many reasons, and we don't need to know why, but what we can identify clearly, the bears are either taking profits, bulls are stepping into the markets, or there's just not enough sellers to get through a major key level. So we still respect the fact that the trend is down, so we wait patiently. The only time we can start looking for tradable opportunities is when the momentum shift kicks in. And that's clearly going to be identified by price breaking a structural level. Now this may not seem massive to you, but it is a huge thing, because most traders will want to take their trades at these levels here. And the reason why they want to take their trades here is because they'll say to themselves, well, price is creating a resistance and now it's coming back to tap it, it's time to sell it. But what you're not identifying is that if price is not breaking this structure, there is no momentum in your favor. And you have to gather this evidence when looking at your charts. You can't overlook it. And that's why I said it takes time and practice. So if price is failing to break structure on the back of a downtrend, which should make a new lower low, and is trending down, then there is no momentum. What you have to wait for is for price to give you the signal that the bears are back in the market, we have broken and closed below a structure, and then we identify this as a momentum shift. Now obviously that's not enough, we need to know how to trade it, and I will share 2 examples with you in a moment. Now let's say the market is consolidating, ranging, moving sideways. We clearly know with a ranging market that price neither has a majority of buyers or sellers involved in the market. That's why price will just move sideways for long periods of time. Most people will start saying orders are being collected, price is about to rally in this direction, using all these wedge and channel patterns to try and figure out where it's going. The truth of the matter is that there is just no momentum to trade. So when the markets are ranging or moving sideways, all you are simply waiting for is for the momentum shift. Now, yes, you can have breakouts and breakback-ins and false breakouts and stop hunts and whatever you want to call it. But the point is, when using a scaling down method, you need to see a momentum shift and you need to wait for price to break and close above key levels where price is respecting highs or respecting the lows. And the way I would view this, or the way I view this, is viewing this as my brick wall, meaning that the candles are my soldiers and my soldiers cannot get past this brick wall. Meaning if I'm planning to buy, then I don't want to buy or send my soldiers into a war or a trade when I know there's a very high chance that they are not going to succeed because of the hurdles or obstacles they have to face. That's the same with my trades. If I'm buying, I need my soldiers to get above the brick wall, start the momentum, get above the obstacle, and then anticipate that there is a higher chance it can continue pushing up or continuing to push down. The final one we'll take a look at is the example of an uptrend. Now, momentum shifts do not always break out of structures, and you can really go deep into this, but this is not what this is about. We can use our lower time frames to identify intraday trends so that we can take advantage of moves that start to happen before they break out. Now, what do I mean by that? Well, here we have an example of a trend to the upside. Now, we know with a trend to the upside, the markets will make higher highs and higher lows. The importance of knowing this is because if you're buying, more than likely you're going to be buying the higher low or the breakout of the last high. So what can happen sometimes is the market can break out of a structure, pull back for a retest, and then within that structure create a key level where price is failing to break above. Now, ultimately the trend is up, so you're still looking for buys, but with the same rules here and the same rules here, you will not be buying this market if there is a key level being formed and your soldiers, your candles, cannot get above the brick wall. So one way to take a trade is to wait for the momentum shift, and you are simply then going to wait for price to break close above structure. Once this higher time frame candle breaks and closes above structure, this is what will create your intraday trends, which will form as a higher low formation. And then when the new higher time frame candle opens to pull back to this level, that will then create your retest or higher low on your intraday time frames, so then you can take advantage of this trend and this move. Now, I know this is a lot, and I mean, as I said, it's not going to be easy. You will have to probably watch this over and take your time to go and backtest it and review what I've said here. But I'm going to give you two examples today. Now, the first one here is on EURUSD. This was a trade that I called yesterday morning, pre-London Open. And the idea behind this trade was very simple. We identified, just like the examples I shared with you, price was moving sideways. Price is tapping the tops and the lows. This clearly identifies to us that there is no momentum in the market. So the trade idea was this: wait for price to close below this level, and then once it does, we can anticipate a continuation back to a major key level, which was our target level. So what we're going to do is we're going to just wait patiently for this 4H candle to close below this level, as you've seen here, and now we're going to scale down. Once we scale down to our hourly time frame, we already know where our targets are. Okay, our targets are down here. We have the break and close below structure. Now what we need to identify on this time frame is a clear wick rejection or a level where price is failing to break below. Now in this instance, we have a really nice wick rejection and an area where price is failing to break below. Once price breaks below this level, we now have a momentum shift. With the 4H time frame in mind, we know price is more than likely going to get back down to these lows. Now we have the momentum shift, we can now scale down to our entry time frame. Now on our entry time frame, we still have our target in mind. We have our momentum shift, which is price breaking below the structure. And now we have our intraday trend, which is making lower lows and lower highs. Now with a trend down, remember I said this is important, once price creates a lower high, what do we anticipate? Well, eventually we anticipate price to make a new lower low. So with that in mind, we take our trades at the break of these structures. You can place your stop loss wherever you want, and then you target your structural lows. Now, I'm not here to focus on the best risk to reward. I'm just here to show you how you would process what a momentum shift is and how then you would plan and formulate your trade. And as you can see here, we would have had a winning trade. Now, this was, again, a setup that I called yesterday morning. Simply wait for price to break structure, your higher time frame momentum shift, your intraday momentum shift, and your entry time frame momentum shift. Okay, so please don't ask me or say in the comments, oh Rox, you picking a just an example here that you've pressed replay. This was a genuine trade that I called yesterday with the exact same approach that I'm teaching you today. We'll look at one more example here on Euro JPY. Now the reasoning behind this setup that I called yesterday was two factors. The fact that price had made a major structural high without pulling back. The second was Euro was super weak, and the fact that yen was showing strength. Now, yen wasn't majorly strong across the board, but Euros was super weak. So the idea here was this. We have a trend to the upside. We have very extended market structure. We also have a level here in the market where price is failing to break below. Now, if the momentum shift is going to pull back to a key level to create a potential double bottom pattern for a continuation back to the upside, then I'm expecting the pullback. The range, if I plan to sell this from this level back down to these lows, is 30 pips. And if I'm using my intraday time frames to get a 3 or 5 pip stop loss, there's enough there for me to take. So the idea yesterday, when it was called in the morning, was break below sells, look for our retest for a potential buy, or our target level for our sells. So all we simply do in this scenario is wait for the momentum shift. Now we have price showing signs of bearish sentiment again. We scale down to our hourly time frame, and what we're looking for here is our wick rejections on the new hourly candle. Now we have our wick rejection. Now what we're doing in this scenario is scaling down to our entry time frame once we get the wick rejection, and we're trying to identify a pattern or a process to validate why the 4H time frame will continue back down to these lows after the momentum shift and after price has pulled back to form what we now can validate as a level created, a level respected. Now most of you will know this as a double top pattern, and then we can now execute our trade once the momentum shifts and breaks closes below this level. Now again, we're not focusing here on targets, we're just focusing here on the process, and as you will probably see, okay, well in this instance, unfortunately this would have been tapped out, but that is what it is. I think the tap out here on this scenario, let me just check it. We can check this on the 5-minute time frame. So price, okay, so this would not have been stopped out as price had pushed up first and then continued down. So let's just say in the live markets, what you want to be doing in this situation is if price pushes up first and you're still anticipating price to come back down to the lows, is you just want to adjust your stop loss above these wicks here. So anyway, the momentum shift has happened, we have the break, we have the pattern, and now we're anticipating price back down to these 4H lows again. And then as you probably can see here, the market just continued to rally. And again, this was a genuine trade that I called yesterday morning. Break close below this structure, look for your target level here, and then lock it in at break even, and whatever happens, happens. Now, I'm not saying, again, this is going to be super easy for you to comprehend, but what you must identify, and these are just two different scenarios, there are many more, but you must wait for price to break close below a level. You must wait for a wick to form, and then you need to validate that with a pattern on your lower time frames and identifying the trend and whatever pattern you form here. Same with EURUSD, make sure you identify the break close below structure here. Make sure you identify the wick rejections and the key levels and then use your lower time frames to wait for the momentum shift, which is the break close below, and then identify the trend down is making lower lows and lower highs, and then look to take the trade back down to your key levels. So I hope that was useful for you. As I said, please go and back test it. This is how I identify momentum shifts. There are many other ways to do it. But as time goes on with experience, you will start to figure them out and learn them yourself. But if you did find this video useful, make sure you smash that like button for me, turn on notifications for all upcoming videos, subscribe if you haven't, and until next time family, continue to trust the process.